Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today here in Europe. I'm Caroline Hepke and I'm joined by Bloomberg reporter Chloe Millet. Good morning, Chloe.
Good morning.
So let's think about France then. Obviously, given the political story that's happening, there's been a surprise, though, for the luxury sector. So perhaps the opposite of what was happening yesterday.
Yeah, absolutely. So we've got LVMH and Kering today up, and that is on the back of an upgrade from Morgan Stanley. So they were both upgraded to an overweight rating. So Morgan Stanley said that even though it was a little bit too early to go kind of all in on luxury and that there was continued weakness to be expected in 2026, it said that industry insiders were most positive that they have been about medium-term prospect for 2 or 3 years. But within that, there are kind of winners and losers. So LVMH and Kering are the winners. They should benefit from a burst of creativity and newness. And by that, they mean a sort of new wave of creative directors and a fashion pendulum that is moving more towards very colourful, very maximalist styles. And obviously we know that Gucci, which is owned by Kering, has that more kind of colourful style, but more colourful aesthetic. And on the other hand, Hermes and Prada are kind of on the losers side of things, and they were downgraded to equal weight by Morgan Stanley, with Prada in particular expected to see a lot of negative impact from a higher competition. So this is quite good news for LVMH ahead of the earnings, the trading update that they have next week, and also good news for Kering given that they have, it's another boost for them really after the confidence really rising after the new CEO was appointed.
Yeah, absolutely. Yes, if you look at all the kind of fashion shows, you know, oranges and reds and vibrant yellows.
Very vibrant.
Yeah, it's bright, isn't it? Forget that kind of quiet luxury look. Apparently
yeah, it's done now.
Gone.
I'm glad actually.
Oh, really? Okay. There we go. Let's also think though about the tobacco company Imperial Brands. Again, another top performer in Europe, but why?
Yeah, well, cigarettes are doing well, and also new generation products like vapes are doing well. So Imperial Brands said that it is on track to meet its full-year targets thanks to growth in both tobacco and new generation products, what it calls new generation products. And that's probably what got investors most excited. It also announced a new buyback of £1.45 billion. So it's a good place to be in for the new CEO who started just on October the 1st. And he really has to deliver on the Imperial Brands 5-year strategy to 2030, which includes kind of this, continuing growth in cigarettes, but in also building scale in that kind of new generation product division, and also running a kind of a more efficient organization. So analysts said that this was a positive surprise and it set the right tone for that new management.
Okay, well, bringing together those two stories, I was walking down the high street recently, saw a colourful advert. I thought it was chewing gum, and I realised that all the brightly coloured tins were actually sort of that chewing tobacco,
yeah.
So those products, which I just thought was quite fascinating. Lastly, though, bit of retail.
Yeah.
This is the British retailer B&M on their results. This is not so positive.
Not at all. So shares dropped more than 20%, 22% this morning, a huge drop. And it's because it flagged weaker than expected profit for this fiscal year. And it said it's implementing a strategic plan that could take as much as 18 months to actually have an impact. So the CEO said that he had conducted a review of the business and found weak operational execution, which includes static and duplicative promotions in stores, too many product ranges which added kind of more complexity in the supply chain, and also very poor on-shelf availability of items. And so it said that all of that will have an impact on profit, with the guidance coming in at least £40 million below analyst expectations. So now the CEO has launched this new strategic plan, which is called Back to B&M Basics, and that includes kind of adjusting that pricing to remain competitive, clearing out some of those rangings and restoring that availability in store. But in the meantime, investors are not too happy about that profit warning.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.